Trading is very risky, so you should never trade with more money than you can afford to lose. And neither myself or Right Line Trading are licensed financial advisors, but we won't be giving financial advice. Okay, if you have any questions along the way, just pop them into the question box here. If you have any questions I can answer relative to maybe some of the pricing of stuff, I'll show you all the pricing at the end. But if you have any questions on that, or maybe for a different time period, you can always call Rory at Right Line right here, 786-732-4656. And I'll bring this box up again at the end. And if you want him to call you, just put your name and phone number, or your not your Skype username, but your Teams username. So if you can put your name and number in there, or your Teams username, and he'll contact you and answer any questions that you have. All right. And this is basically what the alert service looks like. We call it the Compass. The Compass system was the beginning of the SPY Super system. It started out as the Compass system. It's been enhanced and improved since then. It's now called the SPY Super system. I still call the alert service the Compass alert service, but it's the same trades we take with the SPY Super system in the room. And it basically is it comes out on your phone. It's an SMS text alert. I'm a member of that alert service, so I can track to see how fast the alerts come to me. I get them in within about 5 to 10 seconds of the time that I put them in, and they come to your phone, and then you can make the trades from there. And we'll go over exactly what the structure is of that. All right. First thing I'm going to cover is I'm going to cover something that I cover every single webinar I do, and and this may seem redundant to a lot of people, but what I'm trying to cover here is what drives the market, what makes a stock or an ETF or et cetera, what makes it move upward in a trend or downward in a trend, or keeps it chopping around. All right. And there are two categories of traders. There's retail traders such as myself, and I suspect everybody here in the room is a retail trader. That's us. We're these little marbles right here, right? And the big ball up here, big marble, these are the institutions, right? This is what drives the market. When these folks are in force, and when I mean in force, there's multiple institutions pushing a stock in the same direction. You can have institutions in there that some are buying, some are selling. Some are buying, some are selling. It basically is not pushing the market. It's just causing a little bit of chop and chaos. But when the institutions get together, they don't actually collude, but they all see a direction in a stock that they all want. They all want Tesla. They all want Microsoft, whatever it happens to be. We can identify when that's taking place. Now, when retail traders are the ones in the market and the institutions aren't there in any force, what you get is a lot of chop and chaos. The market just chops around, price goes up and down, chops all over the place. There's no trend to follow. It's really very difficult to trading at that situation. So when the institutions aren't in there in any force, we don't want to be in the trade. We don't want to be in there just trading against retail traders. Our job is to trade in the direction of the market that the institutions are creating and take money from the other retail traders who don't know as much as we do. We don't have the information we have. They just don't have the technical expertise that we are able to accomplish to make money, and that's where we take our money from. You're not going to take money from institutions, right? Institutions drive it. They're going to make money. You're not going to take it from them, but you're going to take it from other people who don't know as much as you do. All right. So this is important to understand this, because this of all things we need to know. If the institutions are in the trade, we want to be in the trade. Most of them, obviously, as there are other criteria. If they're not in the trade at all, we don't want to be in there. We'll let the other retail traders duke it out. All right, this is something I threw this in a few webinars ago, and I'll explain the reasoning behind this. This is a blackjack table. So ace and jack spades, that's a nice blackjack. A couple of $100 chips right here. So this is a blackjack table, all right, which a lot of people consider gambling. Well, the reason I brought this up here is if you've talked to folks about trading either options or stocks or trading at all, the thing they're going to ask you, or the thing they're going to tell you is you're gambling. It's just gambling. You can't win. You can't. It's stacked against you. You can't make any money doing this. So is trading stocks and options gambling? Well, the reason I've got this analogy in here is when I was much younger, very young, I made my living playing blackjack in casinos in Las Vegas as a card counter. And I don't know if you know what a card counter is. We don't actually count the cards or track each one of the cards. what you do when you're playing blackjack is you start with a deck or multiple decks. And as cards are removed from the deck, the composition of the deck changes. And depending upon what the composition of the remaining cards are in the deck, you either the advantage either swings to the player or stays with the house and maybe goes up even further in the house. So by keeping track of the cards that are coming out as to whether it's the small cards being removed, deuces through sevens, or the big cards being removed, 10, jack, queen, king, ace. All right, it makes a big difference because as the little cards are removed from the deck, the deuces through sevens, if the remaining deck has fewer little cards than it normally would, the player now has an advantage. The advantage shifts to the player, and when we know that, we can now start making bigger bets and making multiple bets. When it swings back to the house, you just take the minimal bet. So that's how I made my money. That's how I made my living doing this. And what this did was this gave me a mathematical edge over the casinos by knowing when the cards were in my favor. I was actually, I had an advantage over them because I was betting larger when it was in my favor. And they know this too. They tried to identify card counters when I was out there a long time ago, and I get barred from several casinos for doing this. But there was a lot of them, so it wasn't a problem. It was again it was kind of fun. It's fairly tiring because you're tracking cards. You're looking at your hand. You're trying to decide what to do. There really isn't a decision. You're making specific decisions based on specific criteria called the basic strategy. So the reason I bring this up is trading stocks and options is very similar in that without knowing what the institutions are doing, the trader has no edge. So in essence, they're gambling. So both playing blackjack and counting cards and trading options or stocks require discipline and emotional control. This is one of the biggest problems for most retail traders. They are hard pressed to maintain discipline. They aren't patient, and it's very difficult to keep emotional control. They get emotional about their trades, and it's gonna hurt you every time. So the SPY Super System they're going to show you, which is a piece of software that runs on Thinkorswim, that's my card counting system. I call it a card counting system because this gives us an edge over the other traders, allowing us the ability to become consistently profitable traders because we know when the institutions are in there, right? And the SPY Super System, this software, in conjunction with identifying the best high probability trades, can lead to consistent profits. We can find several stocks that the institutions are buying, but we want to try to trade the best one that has relative strength, for example, against the SPY, or one that it's got a good distance to the next resistance level. But this is what the SPY Super System is, and this is why I bring up this blackjack because again, people always used to tell me that gambling, playing stocks and options was gambling, and I want to show this analogy. If you've got the right software, you've got the right methodology, it's not. Otherwise, we wouldn't have. There's I know a lot of professional traders who do this full time for a living. So obviously it can be done. Okay, so in the room we have a couple of rules to trade by. First rule: trade the best, skip the rest. It sounds real easy. This is where we trade the stocks that have the institutions in them, and they have the best setups. That's what we're looking for. Skip the rest. That means we're not going to be trading stocks that the institutions aren't in, or that maybe are right up against resistance levels, so it doesn't have enough room to the upside. We're going to skip those and just trade the best. And it sounds really easy, but obviously it's not. You have to be able to identify these. And what it requires is to sit around and watch a lot, because a lot of times you don't get a lot of the setups that you want. And again, in our room, I say this most every day, our objective is not to make trades, our objective is to make money, right? We're not in here to make trades. We're in here to make money. We don't care if we only make 1 or 2 trades a day and make money, or we can take 6 trades a day, but they have to be good trades. But if we only get 1 good trade, our objective is not to make trades. Our objective is to make money. The 1 good trade puts us profitable for the day. We don't care that we didn't take 5 or 10 trades. So this is meant to keep retail traders from overtrading. Overtrading is one of the biggest mistakes that most retail traders make. They feel as though if they're a retail trader, they've got to be trading all the time. Got to have a trade on. I took a trade at 11 o'clock. It's 12 o'clock now. I got to have another trade on. No, you don't. You've got to have patience. You can sit there and watch. Okay, so it's important to maintain discipline. Now, what I mean when I say that is you've got to learn and follow the process. There are specific criteria, setup criteria that we have to, and a methodology that we have to become consistently profitable. All right, we have very high probability of success. The trades we take in the room, we have an 85 to 90% win rate. That's very, very high. But that's because the discipline and the process we've got is very, very specific. You've got to follow this criteria almost to a T, right? So you've got to maintain discipline. That means you can't get distracted by looking at something on X or something you heard on Bloomberg or CNBC and get distracted by what other people are telling you. You've got to focus on what the market's telling you, maintain discipline, and then learn and follow the process, which was the process fairly simple. And remain patient. This is, I do this on purpose because it's one of the biggest problems I come across is retail traders take too many trades. They haven't taken a trade in a while. They come up with all kinds of crazy ways to justify the trade. It's not a high probability trade, but they want to be trading. You've got to remain patient. Wait for the stock to come back to you, right? Don't do a job, a FOMO job where you have fear of missing out, where you jump into a trade first thing in the morning because it's shooting up, and now you catch it right near the top and it reverses against you. Wait for the stock to come back to a support level and then get it. And then while the person who took it early is getting beat up, you're coming in at the perfect level and making money while they're licking their wounds. All right, so remain patient. All right, now as a profitable trader or retail trader, we need an edge over other retail traders. Our edges in the room and on the alert service is the SPY Super System, the software that we've got to tell us if the institutions are in the trade or not. This makes a huge difference if you know that if the institutions are in the trade. Major, major, major difference. Then we trade what's called relative strength and relative weakness. Now, I don't want you to confuse this with the RSI. A lot of people know what RSI indicators are. This is not the RSI indicator. This is looking at your stock on, like, for example, a 5-minute chart and compare how your stock is trading to how the S&P 500 is trading at the time. If the SPY, when the SPY was moving down today, the SPY was moving down, and you have some stocks that have been stacking green candles, it's got relative strength. It's outperforming the SPY. If the market turns around and heads up, that stock is going to even outperform it even more, right? So you want to trade stocks with relative strength or relative weakness to the short side, right? Really important. I don't know an awful lot of retail traders that understand this. They look at MACDs, they look at Fibonacci's. They don't understand how strong relative strength is, because it's going to give you a stock that if you get in it and the market turns against you, it's still going to hold up well because it had relative strength or relative weakness to start out when you get into it. So that's a key criteria. Trade with the market trend if there is one. Track it. The market trend today was pretty much down. We gapped down and then kind of drifted down, but it was very choppy all day long. So there wasn't really a lot of good trade setups today. I mean, I had a few. I had a decent trade in Tesla and a couple of others that we trade today, but not an awful lot. But we want to trade with the market trend if there is a trend, and then buy near support, sell near resistance. This is really important. If you're able to buy near support and the stock goes against you, you're going to get out of that with a very, very minimal loss. If you're chasing a stock way up and you're getting into the trade when it's way above resistance, you've got a long way to come down before you're going to get stopped out, which means you're going to have a pretty horrible P&L based on that. But if you get into the trade just as it breaks through resistance and it doesn't keep going, if it turns around and comes back down again, you're out, very minimal loss. This is really important. So those are the 4 edges that we have, and they're huge. If you're able to trade like this, you're going to have an edge over about 98% of the other retail traders, the millions of them in the world that there are. Okay, now the Compass system, which is now called the SPY Super System, what this does, it identifies the highest probability trade setups, while sidestepping setups that look good but will fail more often than they succeed. You can have a really good looking technical setup on a stock, but the institutions aren't in it. So we're not going to take it. It looks good, but it's more likely to fail than make money. You don't want to be in the ones that are just mediocre. You don't want to be in a 50-50 trade. You want to be in an 85% winning trade. The Compass system, or the SPY Super System, it does this by identifying when the institutions are driving the move and when they're not. I mean, that's the bottom line on this. It tells us what the institutions are doing. And this SPY Super System software, it analyzes complex trading data, and then it displays the results in easily identifiable formats. In other words, it's going to show colors. You're going to be able to identify if institutions are in the trades or not based on colors. Makes it very easy. So this visual element makes it possible for even new traders to find high probability trades. Okay, so that's what the SPY Super System does. How does it give us an edge over retail traders? Let's reiterate this. Only take trades that are being driven by the institutions. I keep saying this. This is important. You don't want to be in trades if the institutions aren't in there. Trade stocks that have relative strength or weakness versus the SPYs or the Qs, and trade in the direction of the overall market. This is a key right here. This doesn't sound very complicated, but keeping yourself focused so that this is what the only ones you trade is more difficult. Because I mean, if you trade, you know that there's a lot of stuff going on during the day. You're looking at a lot of stocks. It's hard to focus and just take these kinds of trades. And again, it gives us an edge because our trades are going to be supported by institutional buying and selling. They'll be outperforming the SPY, and they'll be moving in the direction of the overall market if there is a direction to the overall market. This is our edge over other retail traders. Okay, now I just want to make one more comment about the SPY Super System before I get into what it looks like and all the indicators that are on there. The SPY Super System software, we're going to talk about results that we've had in the room. In the 3.5 years that I've been doing this, more than 3.5 years now. In 3.5 years, I've had one losing month in 3.5 years. I've had some mediocre months, but I've only had 1 month. Last September was the only month I've had where I actually had a loss in the room. And the reason for this is because these results are you're gonna see they're excellent. Again, 85 to 90% win rate most months. How we do this, it's important to remember that it's the SPY Super System software that's the critical element in finding and trading the highest probability trades. This isn't me because I'm a great trader. It's because I have the great tools to do this, which everybody can use. The SPY Super System software is the engine that drives our exceptional results, and we have really exceptional results. Remember that this is the software that makes it work. The ability to identify when institutional players are driving a bullish or bearish move, and when they're absent, is the key factor in pinpointing high probability trade setups. It's the key thing. And that's the function of the SPY Super System software, and it's the critical component in what makes us profitable and successful. Okay? Keep that in mind as we move forward. I do a live YouTube feed every day about 11:30, rightlinetrading.com. I'm up there about 11:30 every day for an hour. So if anybody's on YouTube, they can come in. You're in the room just like you were a member. For about an hour, you can see exactly what we're talking about. You can ask questions. I have quite a few people every day that do this. I've had a lot of people come to the room from the YouTube feed. Okay. Now, I'm going to run through really quickly the 11 most common mistakes that retail traders make. And if you see something here that you've done, let me know. I'm going to focus on a couple of ones. I did a whole video on this, and it was very, very well received. But of course, I've done all of these, made all these errors in my career. The first thing is not considering current market conditions. Now, this is really important. You've got to be looking at the SPY or the Qs every day on a 5-minute basis and on a daily basis to know whether you're in a bullish or a bearish trend. We're still in a bullish trend on the daily chart, but we were in a bearish trend on the 5-minute chart today. It's critical to know what the current market conditions are because you want to make your trades conform to what the market trend is, right? It's really important. You just can't go in looking at a good trade and a good stock and think, okay, I'm just going to jump into this. You've got to know what the market conditions are because if the market is trending up, then you can stay in the trade longer. You can take a bigger size. You're going to make more profits. If it's a choppy day, you can't stay in this trade very long. You've got to take quick profits. You've got to take smaller size. This is important, and most retail traders don't even seem to take this into consideration. Number 2 is over trading. Talked about this. They just can't stay patient. Trading your P&L instead of your technicals. This I talk about a lot in the room. I've done a lot of videos on it. This is, if you're looking at your P&L and making decisions on your trade, whether you're getting in and out of a trade, it's based on what your P&L is. You're not looking at the technical analysis. When you get into a trade, it should be based on a nice technical setup, a good, solid positive technical setup that's bullish, for example. If you're looking at your P&L and you get a position, for example, that, let's say you're up $300 on your trade, and then it turns around and it goes against you, then you're up 100. Now you're down 50. You're down $50 on this trade that was positive earlier. Now it comes back up again and gets up, and it goes up, and you're up $150, and then it slides back and it's only up $50 again. If you're watching your P&L, you're probably going to bail on that trade because you feel relieved that you're green. That you came out of a red situation where your P&L was red. Now it's green. You breathe a sigh of relief and you get out. You're not taking off that trade based on the fact that it's breaking down. You're taking off the trade because you got a little bit of a profit and now you feel relieved. You're missing the opportunity at that point in time to probably add to the trade, because if the technicals are still bullish and it's still above support, you should be staying in the trade, if not adding to the trade. This is a big problem, this trading your P&L. Trading what you think instead of what the price says. And I go through this every day because I get lots of people that tell me they like a particular trade, and I'll ask them why. And they'll tell me they saw something in X about it, or they saw it in Wall Street Bets about it, or they saw it on CNBC, they read it somewhere, all right? Trading what you think instead of what the price says, right? Trading what you think is deadly because you think you know something, but you don't. And I'm gonna just share a quote with you right now before I go on here. This is a Stephen Hawking quote, all right? And the quote is, "The greatest enemy of knowledge is not ignorance. It's the illusion of knowledge." So when you're trading something that you saw something in X about, or your brother-in-law told you about it, or you read it on CNBC, or you heard it on Bloomberg, you are trading with the illusion of knowledge. You think you know something that you don't know, all right? You're not trading what the market's telling you. You're trading what somebody's told you, or what you've heard, or what you saw. And that is trading what you think instead of what the price says, and it's a horrible, horrible error that you make. It really, really is. I can't emphasize this enough. If somebody tells me they like a trade and they use "I think," "I saw," "I heard," or "I read," it's a bad trade. They're not trading based on the technicals. They're trading on what they think. And what we think doesn't matter. What the market is doing is what matters. Okay, over leveraging, too much risk. Obviously, this is fairly obvious. You put too much risk on a trade. You're nervous about the trade because you've got too much risk on it. You don't trade it well. Not using the daily chart for swing trades. As I emphasized, you've got to have a daily chart that's bullish if you're going long on a swing trade. If you're going against the daily chart and you're going short a stock that's got a bullish daily chart, you have no staying power in that position at all. You've got to get out. You know, you can't hold it overnight. Lack of patience, we talked about this. This basically is part of overtrading. Lack of patience. Forcing trades, again, lack of patience. Making trades related to lack of patience. And I've heard every reason in the book why somebody's taking a trade that's a bad trade. They're forcing it, but they'll come up with a number of reasons why this is a good trade. And not one of them means anything. None of them are technical. They're forcing trades because they don't want to be sitting and not trading. Attempting to pick tops and bottoms, another huge, huge problem for a lot of traders. Not waiting for confirmation to enter a trade. There's two kinds of trades when you're entering a trade, for example, on a compression breakout, a breakout over a resistance level. One is waiting for confirmation, wait for that resistance level to break, get tested, and then go back up again. That's the confirmation trade. Or you can do an anticipation trade, which if it breaks through the resistance level and you take it then, you get in a little bit earlier, but you're going to have more failed breakouts. So in either one of those is actually okay. You just have to be aware of which one you're doing. And then fear of missing out. That's basically that's the lack of patience. When stock goes ripping higher in the morning, you just don't have the discipline to sit there and watch it. And listen, everybody gets that. I've watched stocks take off in the morning, and I see them going up, stacking candles, and you start thinking, I'm missing out on all this money. That's fear of missing out. Please don't do it. Okay, and there's that quote that I really like. Greatest enemy of knowledge is not ignorance. Not knowing something is better off to not know anything than to have an illusion of knowledge, because this gives you a false sense of security, a false sense of confidence in a trade that's not going to work. And a lot of times you'll stay in them way too long because you think they should work. Okay, so this is what the SPY super system looks like. Let me show you something before I show you this. This is the actual SPY super system right here on thinkorswim. This is what the software looks like. Okay, this is QURE. This is a chart I traded yesterday. But these are the indicators on here that we use on the 5-minute chart. This is a 5-minute chart. We have some scanners over here. This is a scanner for relative strength, a scanner for relative weakness. This is a scanner for bullish swing type stocks. Right, but these are the indicators. What we've got here, the key things is this is the actual indicator itself. This is what's called a modified Laguerre. It's an oscillator. It has the divergence stripped out. It's just showing true, pure momentum. This is what we use. This is current time frame momentum. On a 5-minute chart, this is the current time frame momentum for a 5-minute. Green and blue are bullish, red and yellow are bearish. So you can see this in this time frame on QURE. This is yesterday, I think, that you see how bullish it is on the 5-minute. The multi-time frame, this is multi-time frame momentum, and this is the long-term trend. This is what tells you what the institution is doing. This tells me, just by a quick glance, that the institutions are buying the heck out of this thing right now, right? And I'll show you some charts how we take advantage of that, even on intraday trades for quick trades. Now, if you were looking at a swing trade, you'd be looking at the current time frame momentum and the multi-time frame momentum as critical. They both would have to be aligned, green or blue, red or yellow for short, right? But for a 5-minute quick intraday trade, then you can take it directly off of this current time frame momentum. And I'll just show you one right here. This is one that I took yesterday. If you notice that it was red over here, which was bearish, and went to blue, which is bullish, and then it went to green. And it's this pink line right here is called the volume weighted average price. That's the VWAP. This is what all the institutions use to buy and sell. When this stock breaks above that VWAP right here, this is where I took the trade. It's compressing and it breaks out right there. I take it long and I just ride it up, and as long as it stays above the 15, I ride it up. And this was a beautiful, beautiful trade yesterday. I took 2 of these. But this is what the SPY super system looks like. I'm going to go back to the slides, but I just want you to see it in real time. This is what it looks like. And we'll look at a few more of these as we go forward. Okay, so let me go back to the webinar. So I've got them just highlighted here with the verbs on the verbiage on these. Momentum oscillator right here. This actually is the oscillator that creates this momentum, current time frame momentum right here. This would be on a daily chart. This would be 5 minutes. This is multi-time frame momentum on a daily chart. That's the 5-minute, the 15-minute, and the 45-minute. It's looking across all 3 of those. For all 3 of those to be red, this is mean we're getting a multi-time frame momentum is red. Here we're saying that the institutions are starting to come in and starting to buy it right here, but it hasn't flipped over to the multi-time frame. But this is all I need for a quick intraday trade. But if this was a daily chart, these would both have to be bullish or bearish. So you get current time frame momentum, multi-time frame momentum, and long-term trend. Right? See, these are the key levels that we're looking at, or the key indicators we're looking at on the 5-minute chart itself. The most important line right here is this pink line, this VWAP. It's volume weighted average price. That's what all the institutions use to buy and sell. If you're going to go long, you want the stock price to be above the VWAP. If you're going to go short, you want it to be below the VWAP. It's a key level we use on 5-minute trades. You do not use the VWAP on daily charts. Now, this is the 15 EMA of an EMA. This is a smooth 15 EMA. When the price gets away from the VWAP, this becomes a support and resistance level. This is what we use to trade 5-minute candlesticks right here. All right, that's the 15. And then we have a pivot point right here, this white line. I only have one pivot point. It's a very strong pivot point. I don't trade off of it, but as the stock price approaches it, if I'm in a trade, I'm going to think seriously about taking profits. And then we have these pop symbols right here. These pop out of the box symbols. You see these blue ones here? These are breakouts of compression to the downside. And then we have pink ones that show breakouts to the upside of compression. There's one right there. So these help you enter a trade by knowing we're breaking through the 15. It's coming down. The institutions are selling it. You can take it short right here, ride it down to the VWAP, and then get out. All right. So those are the indicators that the SPY super system has on. Okay. Any questions on any of those? We're going to see lots of them as we go forward here. This is all you need to know to know if the institutions are in the trade. Now we did add one more thing. This volume, this trend down here. This is called the market internals. We use this on a 5-minute chart. When this tells us if it's trending down or trending up, and it goes from red for bearish to blue to yellow for bearish, then to blue for bullish and green for bullish. Right? Trending down yellow means it hasn't really gotten seriously bearish yet, but it's getting there. So this keeps up all day long, and it gives you an identification. Gives you an identification of what the market internals are doing right now. Right? Market internals is how much volume is on stocks that are going up right now, minus all this amount of how much volume is there on stocks going down right now. And if it's bullish, it's going to be green or blue, and it's going to say trending up. And if it's bearish, it's going to be yellow or red and trending down. So if it's trending down, that means right now there's more volume going into stocks being sold than there are going stocks being bought, and that's across the whole New York Stock Exchange. Right. So the rest of it's the same, of course, but we have added that as the current market momentum that shows up here. All right, and just a couple of quick trades I want to show you that we've taken so you can kind of see how this works. This is a trade in NVIDIA. This is off the daily chart, so this was a swing type trade. This is where we took it, where this little arrow is. If you look at what you see here, you see it moved up. We didn't take it in here. I took it here on this. I probably didn't notice it here, but I took it on this drop back down to this 15 EMA. This is what's called a PBO, a pullback opportunity. When a stock pulls back to support, like the 15, and it's got institutional buying, which it obviously does. You can see the institutions are buying the heck out of this thing. The next day we bought it right here as it bounced off the 15, and we took it off right here, and we were in there from 8.4 to 8.7, 32% profit on that trade. That's a swing type trade. So you'd have to have the daily chart, the current time frame, and multi-time frame momentum would have to be aligned, which they were. Okay, this was SMR. This was another nice one. Another daily chart. This is a swing trade. We took it in right here. This shouldn't be here. We took it right here. Notice that they had earnings here. This is a bearish right there. You see the bearish yellow right there? Then you see how it went to green, bullish, and the multi-time frame was already bullish on the daily chart. This is where we take the trade. Now the institutions are in across the board here. Trend was up. We take it right there, and we were getting in for a 56% profit. We get in on 513 and get out on 515. 2,000 invested in each in the options, created $1,170 profit. And I use $2,000 invested as just a baseline, so I've got something to compare everything to. Obviously, nobody has to do that, but all my results that I post are going to be based on $2,000 per trade. Same amount of money, not the same amount of contracts, same amount of money in each trade, right? This is a 5-minute trade. This was an intraday trade. This is what we call a SPY super system trade on the 5-minute chart. And if you notice, we're only interested now down here in the current time frame momentum. And this was a Tesla on the breakout in the morning right here. See how it went above the VWAP? And it's blue. We can take it right there as it breaks above the VWAP. We can take it there, make sure the price stays above the VWAP because that is our support level, right? Buy at support. We're buying right there. We get up here, we take it off right here for $307 right there. So that's a nice little move. It's a quick trade. It's what's called a SPY super system methodology trade using the current time frame momentum only. Okay. This was another one on the SPY. This was actually a SPY super system trade on the SPY. So here's the VWAP right on the 5-minute chart. Here's the current time frame momentum going from bearish here to bullish. See, it turns from yellow to blue right there on that pop. See how you get a pop out of the box and it goes above the VWAP? That is the ideal perfect entry. You just take some calls on the SPY, you ride it up, it gets up here, starts to turn around, you take your profits right there. Really not complicated when you're just looking at them. And we can see the institution stayed in this. They stayed in it all the way across here. So you could have stayed in the trade. But for me, if I'm in a trade and I'm up here and I got a good big profit, I'm not going to hang around it if it starts to pull back. I'm going to take my money and run. Okay, and this was Wendy's. This was another bullish trade, a bearish trade overnight. Daily chart right there, daily. Earnings, you take it right here as it goes from buying, see the blue, to selling to the red. We take it right here. We take it overnight. We take some puts overnight. We're out the next morning right here on this move down. Institutions selling it. And this is just a touch of humor. This is basically what emotional traders look like. And they may not look like that, but that's what they feel like. And trading emotionally is a really big problem for most traders. If you're doing FOMO or you're watching your P&L, you're instilling emotions into your trading. And if you're trading off emotions instead of off of technicals, you're going to get in trouble. It's a very, very bad situation to be trading emotionally. You don't want to do that. You want to be as calm and relaxed as possible, just trading off of very specific methodologies. And here's somebody who's got the SPY super system, is happy with the results he's having, and he feels happy about winning like this. So it's a big difference. You don't want to be this guy. All right. The process procedures, I'm just going to run through this quickly. And this is kind of goes back to not using your P&L. It's important to learn the high probability trade setup criteria and internalize those, and they got to come before we focus in results. You've got to learn the process before the results are going to come. And if you're looking at your results and trying to decide whether you're a consistently profitable trader just based on your P&L without having learned and internalized the criteria and the methodology to use, it's going to end in failure. If you're trading in P&Ls, you're going to be in big, big trouble. All right, we talked about that before. This is what we look for the high probability trade setups. I call it the high probability trade setup funnel. This is the thought process that I go through when I'm looking for trades. So I look at the daily chart first if I'm going to take a potential swing trade. And a swing trade to me is anything that's going to last 4, 5, 6 hours up to 3 weeks. I mean, not a 20-minute trade, but anything that's going to last for at least a few hours, several hours, up to a few weeks. The daily chart, I have to look at that. That's going to be bullish if I'm going to go long. If I like a stock and the daily chart's not bullish and I want to go long, I can't take it. So the daily chart's got to be bullish for a long, bearish for a short, and then you look at your 5-minute chart and try to find a good entry out of that. Okay. Trade with the trend, both the stock and the market. All right, this is important. Again, this is another one. Trade with the trend. What's the market trend? You want to be trading in the direction of the trend the market's in, if at all possible. On a day like today, when the market was down all day, SPY was red, Qs were red, you should be looking for shorts if you're going to have intraday trades. Swing trades is a different story because it's tough to trade swing trade shorts right now, but you want to trade with both the stock and the trend in the market. That's what's called the context. The SPY super system must align. Your SPY super system got to be bullish for a long trade and bearish for a short trade. Simple as that. The current time frame momentum, multi-time frame momentum, both have to be aligned. And then you trade relative strength and relative weakness, and then you try to enter near support and sell near resistance. That's the whole process right there. Right? If you've got a stock that meets all these, but it's not near support, you can put an alert on it at where the support level is and have it alert you when it gets to that level. Okay? Okay. All right, so somebody's just telling me that the members of the Oracle and Google are popping after hours on the TikTok news. These are the strategies we use in the room. We do straight calls and straight puts. Of course, we do a lot of these. I do straddles and strangles. Straddles and strangles are a particular option strategy where it's considered non-directional. You don't care which way the stock goes. You just want it to go in one direction or the other by quite a bit. Straddles and strangles, very effective trading strategy, and we use these quite a bit. I use debit spreads using weekly options expiration. Debit spreads reduces the cost of your trade as opposed to a straight call. And we do it with weekly expirations. The debit spreads on weeklies expiration dates tend to generate much better ROI than something that's going out 2 or 3 weeks. I do time spreads over earnings. We do these quite often during earnings season. This is another non-directional trade. We capture volatility crush when the earnings come out as the market makers jack up the premiums. And we have a weekly ATM strategy to capture the premium week after week. And we do some credit spreads. We did one today on CoreWeave. We've got a credit spread for October 17th on CoreWeave. We sold a $110 put, bought the $105 put. It's way out of the money and captured about $110 of premium doing that. And then we also do SPY super system trades in the room. Now this is a very high probability trade setup that lasts, they're very quick. They're on the SPY, the Qs, the IWM, or you can do them on the futures. Or you can even do it on some stocks. But these are very quick, and I have a video on how to do these, the structure, the criteria, but I can't post them or call them out in the room because they're too fast. But it works really well, and for people that want to take a lot of trades that are high probability trades, this is nice. For people, they're basically scalping type trades. Okay, and the alert service, by the way, is designed for day trades and short-term swing trades. It's not basically an investment type letter. It's for day trades and short-term swing trades, designed for traders who don't want to watch or can't watch the market all day. And we put out real-time alerts on the highest probability trade setups. Any trade setup you get on alert is going to be a high probability trade setup. That's all we send out. And the highest probability trades we identified by looking at stocks that have institutional involvement, market internals, and technical analysis. This is how we determine what the best trades are, and we have to look at the charts to come up with that. This is my equity curve from this year. This is based on $2,000 a trade because I don't do that necessarily. I vary my amounts, and sometimes they're a lot more than that. But for anybody putting 2,000 into a trade in the room, this is what your equity curve would look like for this year so far. Okay, if you took every trade. All right, now we're going to talk a little bit about Heiken Ashi candles here, and I'm going to show you a few real live charts with Heiken Ashi candles and how to use them, how to help improve your trading. So let's talk about Heiken Ashi candles. This is just a graphic of a candlesticks. Now this is British pound, Japanese yen, doesn't matter. It could be anything. Just happens to be the example I got. But the stocks, the options candlesticks right here, I'm sorry, the candlesticks that have flat tops on them like this, flat top candlesticks are called bearish Heiken Ashi candles. These would be set up as a Heiken Ashi candle, and you can create the candles on your room, in your platform, to be either Heiken Ashi or a regular candle, or high, low, close, whatever. But these are Heiken Ashi. Notice flat top candles are bearish Heiken Ashi candles. This is a downtrend, a Heiken Ashi downtrend, bearish. You can see the flat top candles repeating one after the other as we come down. Now, the way we generally use Heiken Ashi reversals is in a stock like this. Let's say we were looking to actually go long. We're waiting for it to pull back to support. So we see it coming back, and we're getting flat top, flat top, flat top. Now it starts to get wicks and tails, and then we get a flat bottom candle right here. Right now, this is important, what I'm going to say here, because this is a Heiken Ashi bullish reversal candle right here. And a lot of people would grab that for long, and you probably would have made some money on it. But one of the criteria that you need to have when you're getting a Heiken Ashi reversal to go back into a trend, the candlestick that's creating the reversal needs to be as big as the candlesticks that caused the actual downtrend in this case, right? So I wouldn't have taken it there. I'd watched it, and I'd watch it, and this is where I would take it. It chops around. We get another Heiken Ashi reversal candle with a flat bottom. Flat bottom is bullish. Flat top is bearish. See how big that candle is compared to these? That is a Heiken Ashi reversal. This is where you would enter the trade right here, and this is where you would take it up. Flat bottom, flat bottom, flat bottom, flat bottom. These are all Heiken Ashi candles with flat bottoms with a doji mixed in. And then when you get up here, and then you get wicks and tails, you take profits right there. That's a trend, and a Heiken Ashi, bullish Heiken Ashi trend with Heiken Ashi candles, and they're much easier to see than they are with regular candlesticks. Right, so that's Heiken Ashi candles. Now the distinction is, again, let's focus on this. Is the most important thing to take away from Heiken Ashi candles. Bullish Heiken Ashi candles have flat bottoms. Bearish Heiken Ashi candles have flat tops. There's a big difference here. And again, the Heiken Ashi reversals are identified by bullish reversals, flat top Heiken Ashi candles, followed by flat bottom Heiken Ashi candles. And there can be other candles mixed in between, obviously. They can be doji candles. A bearish Heiken Ashi reversal is identified by flat bottom candles, followed by flat top Heiken Ashi candles. Right? Those are your reversals and what Heiken Ashi candles look like. Right? And understanding these, here's another description of this Heiken Ashi candle trend right here. These are all Heiken Ashi candles. Flat bottom candle in an uptrend signals a strong visual of a current trend. So this was the trade we just looked at. Flat top, flat top, flat top. Those are Heiken Ashi candles, bearish Heiken Ashi candles. Now let's say this blue line was, for example, a VWAP or a support level. This is where we're waiting for the stock to get above that because we wanted to go long. So it chops around, it breaks above there with a Heiken Ashi candle right there. See the flat bottom? We had a flat bottom reversal, then we break through the resistance level. This is where you would take it, and you would stay in it as long as it stayed above your resistance level, which it did, right? And you just keep stacking candles. You see how smooth that is? And you can just see the uptrend, one candle after another, after another, after another. Probably start to think about getting out right here. If you're stuck in it, you're obviously going to get out here because here we're getting wicks and tails and then a flat top. This is a Heiken Ashi bearish reversal right there. You take your profits, right? So that's what you're looking for. And I'll show you some live charts on these. Okay, so we already covered this. That's the distinction of the Heiken Ashi candles. All right, so this is the advantages of these Heiken Ashi candles. It smooths out price action, reducing noise, right? Very important. The noise a lot of times on 5-minute candles will shake you out of a trade. Heiken Ashi candles will smooth that out. They make identifying trends much easier. They improve identifying confirmation of trends or trend reversals. This is a big one. When you're looking for stock to pull back to support and then bounce, this is a really critical way to use that. And it helps identify potential exits when the candle bodies shrink or the reversal occurs. That's what your recap of your Heiken Ashi candlesticks. Okay. Now this is a graphic on Uber. I just want to show you the difference. One chart with the difference between regular candles and Heiken Ashi candles. This is Uber. It's back a couple of years ago. Doesn't matter. I want you to focus on the May 1st date right here. Right. So here's May 1st. You see how we get a gap up and then another gap up. These are standard candles. It's kind of difficult to grab that. This is the Heiken Ashi candles on May 1st. See May 1st right there? Notice no gaps. There's no gaps in Heiken Ashi candles. And if you were taking this trade, you see how you had your candlesticks coming down here with flat tops? And then it's switched to a flat bottom. That's a Heiken Ashi reversal candle right there. And see how big it is compared to these? That's where you would take the trade, right there on May 1st. And then you would just ride it up on Heiken Ashi candles until you're ready to get out, which would be right about here. All right, and this is TC2000. I'm showing you this on a different platform because of the colored candles, but we'll show you this on the SPY Super System in just a minute. But that is what it looks like. So again, here's what it went from right here. This is where you would have got in, right here on this candlestick. You might have had a hard time doing it here because it was such a big move up. But if you're taking it here, right there, that confirmed that candle is a Heiken Ashi reversal candle. You can get in. Now, it's important to remember, once these Heiken Ashi candles start to form during the day, on a 5-minute chart, once you're about 2 minutes into the candlestick, if it's got a flat bottom, it's going to probably stay that way. And on a daily chart, if this is like 1 o'clock in the afternoon and you got a flat bottom, it's very likely it's not going to reverse from there. It's going to stay bullish, right? So that's important. So there's your Heiken Ashi candles. That's what it looks like. One thing to notice also, I didn't point this out, was Heiken Ashi candles. The next candle always starts in the middle of the previous candle because of the way they're constructed. It always starts in the middle of the previous candle, just like that, all the way up, always in the middle of the previous candle. Okay, so we're gonna look at some live ones here. So I'm gonna bring up the software here, SPY Super System software. I do want to show you one thing here. This is a trade I took yesterday. Now, this is QURE. I took a couple of trades on this yesterday. This is yesterday's price action right here. All right, on these Heiken Ashi, on the QURE, right? But if you look here, and you can see that the institutions are buying here in the current time frame momentum, right? But you notice the stock is below the VWAP. You want to go long once it breaks above. Now you could have taken it right there and stayed in. You probably might get shaken out. But this is where it stays green here. This is where I would have taken it right here. As it breaks above here and shows some consistency in candlesticks, you can take it long right there. And once you break above, you see how it stays green? You can take it there, and then VWAP becomes your stop. And then as it pulls away, the 15 becomes your stop. This was a nice trade yesterday on this QURE, and this is where you would want to get out right here. We had a couple of those yesterday. There's another nice one right here because the institutions are buying it. That's what you would use. Right now, if I switch these candle style over to Heiken Ashi, we're going to look at a couple things here. Okay, it's Heiken Ashi. So there's Heiken Ashi candles. You know, you notice here where it comes across, you see how you've got wicks and tails, and then you get flat bottoms. See these Heiken Ashi candles right here with flat bottoms? See how you can see the trend? Flat bottom, you get a little bit of a tail there, flat bottom. And then when you start to get these tiny candles, you can get up, but very easy to see, all right, on how these things work. All right, now I'm going to switch this over to daily chart because I'm going to take a look at some Heiken Ashi candles from today's scans. I need to take a look at some. I just run a quick scan over here so I can see which one of these looking good. And it might be a little tough today because for long because we didn't have it was a fairly bearish day. So let's take a look at a couple of bearish ones first. Okay. All right, so we'll look at one here. This is called Eat. You know, this is Brinker's International Restaurant. All right, here's the daily chart on this. This is something we'd want to go short here right now. If you look at this, you can see we've already had a bunch of Heiken Ashi reversals here. See this Heiken Ashi reversal and then a continuation to the downside. Now we're compressing. This is called the Heiken Ashi continuation candle right here. See how it goes from wicks and tails to a flat bottom, flat top. That's a Heiken Ashi reversal to the downside. So this could be taken as a short. All right, this could be taken as a short tomorrow morning if it opens red on EAT because the institutions are selling it off. Right, so that's important that they're doing that. We take a look at CPRT. And these are Heiken Ashi candles. Again, this is a continuation. The market's been pretty weak here on some of these trades. So you can see this one, this was the perfect entry for it here. Now it's flattening out. Now we can do it again tomorrow to trade this to the downside. CPRT. Well, CRM is also one, but let's take a look at it. See if we can trade it. See now here's a CRM. This is a Salesforce. It came down and now it's bounced up and now it's got a Heiken Ashi reversal candle right there, right to enter this trade. But notice that the monthly time frame is bearish, but notice the current time frame is still blue. We can't take a short trade in this as a swing trade because we do not have these aligned. This would need to be yellow or red. It's not. So when we see that situation, even though the stock looks like it's a setup, we can't take it because the institutions are not in this yet on the daily candlestick. We'll take a look at Amgen. Another decent short here. And here's the Amgen. Okay, coming down, bounces up with Heiken Ashi reversal to the upside. Can't take it because see how this is red. Now we cut back down today. This is a Heiken Ashi reversal to the downside right there. Bearish candle, flat top. We go to yellow. This is a short for tomorrow. Amgen, this is a short for tomorrow. We have to obviously got to look at other things in the daily chart, but this is a definite short setup. That's what you're looking for. You're looking for the Heiken Ashi reversal, and you're looking for your SPY super system to tell you that the institutions are taking it short. I'll see if I can find any longs. It's probably going to be tough. But we'll take IBM. Just probably a little extended. But again, here's IBM. We had a little bit of a wick and tail yesterday. This is actually a bullish Heiken Ashi continuation because it's moved up and already did a Heiken Ashi reversal. So this is a continuation, but it's nice, green across the board. Definitely a good long right there. Right, CNC is another one. Okay, the CNC pulls back, flattens out, Heiken Ashi reversal right here, right here, right here. This is the Heiken Ashi reversal trend to the upside. You can take it long because your current time frame, multi-time frame are green. You can still take it even though your trend is down, the longer term trend, because this caused such a big trend. But you can see the big candlestick here. and then the reversal right there. All right, what else we got here? TJX is an interesting one. And here's TJX. Now this thing has been moving pretty flat sideways for a good long time. Just chopping around, chop, chop, chop. Notice buying, selling, back to buying again. And here's a hike. You notice we got a Heiken Ashi reversal right here. We didn't have Heiken Ashi reversals in here. These are wicks and tails. Here's the Heiken Ashi reversal to the upside. TJX becomes a potential long for tomorrow. I write that down as a potential long for tomorrow if it opens green. I mean, I'm going to make a note of it right now. And this is what I do in the evening, is go through and looking for setups for the next day so I can share them with the room. Okay, Yum Brand's another one. So even though the market was very weak today, there's some decent looking ones here. And the key here is you got a Heiken Ashi reversal candle. See the tail? Flat bottom. You got a Heiken Ashi reversal candle, and the market just went, the institutions just went buying on the current time frame daily, and the multi-time frame was already green. This is another good one. Yum Brands is another one you would want to make a note of as a potential long, as a Heiken Ashi reversal tomorrow that has institutions in it. All right, you got to see what it does tomorrow, but that's a pretty nice setup on that one. Right, so there's a few of them like that that I've got here that we trade, and this is kind of what we look for, is these Heiken Ashi reversal candles. Now you can do it on the 5-minute chart as well during the day. If I wanted to trade, for example, I wanted to trade the SPY today, which was horrible, right? It was an awful day on the SPY to try to trade anything really. But if I go back to the beginning of the day, let me move my chart down here. All right, so here's the 5-minute chart on the SPY today. So what could I take something here? Go back and look. Well, right here is a pretty good one, right? It's a Heiken Ashi reversal to the downside. Notice the institutions are, this is a 5 minutes, so I only need the current time frame momentum. You see how the institutions are selling it here? And here's the flat top. This is a Heiken Ashi reversal. You take it short here because it breaks through the VWAP. That becomes your stop. You write it down, you write it down, you write it down. And here you see how we went to buying again. You got to be out. Most likely get out right on that candle, even before it turns blue, because it's bouncing back up. So that's a decent trade. I mean, that's a decent 35, 40-minute trade that you would have made probably close to $100 a contract on if you had SPY puts on, all right? So for the SPY, but that was really, and it was red all day long. So you really didn't want to try it long. See, if you tried to take it long here, you could do it here because here it is breaking above the 15. You see the Heiken Ashi reversal, but look where your VWAP is right here. You're limiting your upside potential by running into this resistance level right here. It ended up working, but it would have been much more difficult, right? So that was a SPY. Now, a trade I took today was Tesla. I took this. I actually took it long today, but I'll tell you where I took it. Boop, boop, boop. Right in here. I just took for a short trade. You see how it went bearish to bullish? See this breakout of the over the VWAP to the flat bottom candle right here, and I just take it right there, and I wrote it up, and I get out pretty quickly. There's some brief price movement. This was a lot of points in Tesla, you know, like $1.50 per contract just for that little move. But that's what I use. Right, again, these are Heiken Ashi candles. If I switch over to regular candles, this is what it looks like here. Still would have just taken it in the same spot. But see how it put this red candle in with the Heiken Ashi candles, you wouldn't even see that red. It would have stayed green. Right, so that's how what you can use during the day. You can trade futures the same way if you want to. There's the ES right here, the E-minis. Okay, there's the E-minis. Again, where could you trade these things? Well, probably want to trade it short. You got to try to find a short setup. Oops. Got to go way down here. Get the ES switch back over. Okay, so there's the ES today. So there's a few potential ones. This was a good break right here, which you could take. This is a ES at about 120. As it breaks down with a regular candle to the downside, that would be a Heiken Ashi as well. You just take this short. As soon as you get a green reversal right there, you're out of it. But you notice you can use the SPY super system on whatever you want. If this is on the ES, you could use it on the Qs. You can use it on the NQ. You can use it on anything you want to on the 5-minute chart for quick intraday trades. Okay. All right. So there is the SPY Super System in action here. One of the nice things, by the way, about these symbols right here is if I click on them, this is like a 5-minute trade. If I look at SRRK, for example, I just click on it, and it's going to bring up the chart right from that. So you can, during the day, if you're looking for stocks with relative strength or relative weakness, you can just click on them, and it brings up the actual price action for you. Okay. All right. All right. So we've looked at some Heiken Ashi reversals from Friday, but these weren't from Friday. These are from today. I usually do this on Saturday. Okay, so I'm going to look now at the results we've had. If anybody has any questions on those Heiken Ashi candles, again, you'll be getting a copy of this when it's over, and you can review the Heiken Ashi stuff. But try using them. Try setting your candles. You see how I switched them over on Thinkorswim. Switch them between regular candlesticks and Heiken Ashi candlesticks. You can do that on any platform that you use. It's important to understand that with the SPY Super System on Thinkorswim, I run it on Thinkorswim. It has to run on Thinkorswim. You download the platform. Brightline puts the software on there for you. It's all set. But you don't have to trade on Thinkorswim. I don't trade on Thinkorswim. I trade on Tradier because commissions are so much lower. But I take all my indicators off the SPY Super System. Okay. All right. So these are the results. I'm going to run through the results that we've had with in the room and on the alert service. I'm not going to cover every month because we've had so many, but I'm going to show you what we do. Again, this was the 2023 results right here using $2,000 per trade. Again, this is an arbitrary number that I use. Investing each $2,000 in each trade taken in 2023 produced $60,000 to $2,208, $60,208. Right? 2024 using $2,000 per trade produced about $55,000, just a little bit less. And again, the number of days you have which are trending and the number of days you have which are choppy on the SPY has a big impact on how much profit you make. Obviously, the profit is going to be dependent on how long you can stay in the trades, and you can't stay in choppy trades as long as you can stay in trending trades. Okay, and I want to point this out. This was back in April when they put the tariffs on, and then 2 days later they took the tariffs off. We were in just 4 trades. On the 28th to the 2nd of April here. We were in 4 trades. The SPY was down 10% in 2 days. That's a big drop, 10% in 2 days. We were in AVGO, this is Broadcom. We entered a short, we entered for $75 a contract, closed it for $104 a contract. 75 cents is what they call it with options, but options you have to multiply times 100 to come up with your cost. So in for 75, out for $1.04, 39% profit. Nike, we had entered for $285, had a massive gain on this, closed for $9. Really huge, 216% profit, 2,000 invested, and that produced $4,300. This was because when the tariffs went on, we were already short Nike, and since Nike makes all their products in Vietnam, and they were talking about a 39% tariff in Vietnam, the stock just absolutely cratered, and we were able to get out the next morning. We had Sarepta in for 450, out for 8. These are normal type percentage gains you'll see. And then NNE, we had this one for 25% gain. Again, these were the only 4 trades we had on during this period. We had them on the alert service and in the room, and we made huge money on all 4 of those. We didn't have any other trades on at the time. Okay, so just to kind of bring you up to date, this was this past June. These are the results we had. We were 10 wins and 1 loss, only had 11 trades. Again, I was on vacation for 2 weeks in June. I do that once a year or so. So the trade count was lower than normal, but pretty nice. 91% win rate, 37.90 in profits. Pretty good, a pretty good win rate here. In July, these are all the trades we took in July. Notice we have losers. I want to emphasize that every trade is not going to be a winner. We take losing trades. But it's what you do at the end of the month that really matters. But just notice the percentages that they stick around 20, 30, 40, 50%. We're not looking at 200, 300, 400% trades, profits. That's not a practical expectation when you're trading to try to make that kind of money per trade. You just can't be consistently profitable like that. But you can see where they stay. And this again, I point this out because this is, if you're in the room or you're in the alert service, this is what you can expect for profitability on the trades that we take. 15, 20, 30, 40, 50%. We did have the Sarepta here for 166%. So July was 30 wins and 3 losses. This was our best month of the year so far. 30 wins and 3 losses, 91% win rate, 2,000 invested in each trade, produced about almost 17,000. Pretty nice month. Here's August, 20 and 4, 84% win rate, produced 5960. And September, up through the 18th, first 3 weeks, 12 wins, 2 losses, 86% win rate, fairly consistent. 2964. A lot of small profits because the profit market's been very, very choppy here recently. We had a couple of losses, and again, you're going to see losses. But again, the big name is what number is how much money you're making each month, generally speaking. All right, I'll just run through these real quickly. This is January of 2024. Just want you to see the percentages here. Right, they stay around the same. We did have 96% Boeing, but that's where they stay. 90% win rate in January, 92% win rate in February, 11,000. May, we did 88% win rate. We did make money in March and April as well, but I want to put too many of them out here. So anyway, nice profit here for 49.79 on the alerts and 57.36 on the room. Just to give you an idea of what the results are likely to be. All right, here's June. Again, pretty nice. June last year, 86% win rate, 92% win rate in the alerts. July, same thing, little 75%, little low win rate there. This was July, but still $6,000 at $2,000 per trade. Is August, okay, 4,300. Last year, 4,500, and alerts 2,400. And again, see the percentages; they don't vary much. This is my one losing month last year. It was in September last year. 8 wins, 5 losses, 62% win rate. Embarrassing for me, very embarrassing. I don't usually have anything like that, but it is what it is. You can't fight the market, and we get burned on a few trades. Only lost $1,786 in the room with 2,000 per trade, and only lost $295 on the alert service. So not terrible. And then if you look at that 1786, and then you look what you did back to October, 74.48. So profit. So another big win in October. Okay, and there's November, same thing. I won't go through every single one of these. All right, and this was this year, January, March, April of 2025. You can see the win rates: 84, 89, 83, 85. Very consistent. Okay. All right, so those are the results that we have that we've had, and we continue to have. But these are the results that we get. This is what you can expect if you're in the room or you're on the alert service. Now, as far as the alerts are concerned, some people ask me what do they look like? What do I get when they come to me? Well, this is the Nike alert right here. The first alert you would have got would have had the date. You would have had NKE, you would have had your symbol. Buy the April 11th 67 puts for 285. That's the whole trade right there. In other words, you're buying the April 67 puts. So we're doing it short. Here's your expiration date, April 11th. Here's your strike price, 67 for 285. Once we decided where we want to try to get out of this, you would have got the same alert with this added on, sell order for $9 to tell you to sell it for $9. And then when they're closed out, it would say close for 9 on April 3rd. Now, it's important to understand there could be other, I could make more adjustments to this before we actually close it. I could have changed it to 950 or 850, and you would have got an alert to tell you that. But you're going to get an alert to tell you exactly what's going on with each trade, good or bad. Okay? And how do we achieve these stunning results? I think I pretty much talked about how we can achieve these stunning results. We're able to identify when the institutions are driving the trade and when the market internals are heavily bullish or bearish. Okay, and then we take when those two things are lined up, we take those kind of trades. And I will say on market internals, if they're neutral, I'll still take the trade if the institutions are in the trade, right? But that's how we do trade the best, skip the rest. This is how we achieve those results. How do we do it? Again, triple screen assessment, fractal, whatever you want to call it. On momentum trend, we also have some money flow, but momentum is especially critical. It's very difficult for a stock to have multiple time frame momentums that are all going up in the same direction with the same speed across multiple time frames without institutions being involved in the trade. almost impossible. So that's why there's such a high win rate on these, and why have such high confidence that these institutions are in these trades. All right, and again, we've seen this. That's the actual SPY Super System template right there. We also have another template. If you get the SPY Super System, you get this template, and you'll have the alerts and everything. But I mean the scans and everything. But you'll have this template that shows all of these indicators, and then you can have another one. You can swap them back and forth. This is for folks who are just doing intraday trading off the SPY, the Qs, the IWM, the futures. This is the current time frame momentum. It's the only one you need for 5-minute trades, right? Same colors apply. This is all you really need. You get the VWAP, you get the 15 EMA, you get your pop out of the box signals. All right, this is a new template for the SPY Super System methodology trades. When I say SPY Super System methodology, I mean trading off of a 5-minute chart for a short period of time. 1 candle, 2 candles, 5 candles, 6 candles, not 4, 5, 6 hours. Those would be swing trades. You'd want to be looking at your daily chart for that. Okay, and this was a SPY Super System Heiken Ashi reversal trade that we took. We get in right here, see the compression, wicks and tails, Heiken Ashi reversal right there. This is where you take the trade. You take it short right there. Notice it went from buying to selling right there. You take it right there, and it goes down. You just stay in the trade. I don't even know how far this went, but you can see the setup here that it's breaking below the 15. The 15 becomes your stop. You write it down. Okay. I'll just recover the SPY Super Systems for the 5-minute trades, the quick 5-minute trades, the ones that I can't post or call out, but people use them, and I do tell you when I identify them. These are the trades that I've taken, and these are my results. These are not the room results because I can't post these. A lot of people in the room do better than me. A lot of people do worse than me, but these are the trades I've taken in the SPY Super System since last July when we started it. And these are you can see the August 56, 6 wins, 2 scratches. These are a lot of trades, They produce really nice profits, right? But the key thing with these is on these SPY Super System trades, you're only going to have 1 trade on at a time, and you're going to have to watch it because they're pretty quick. You got to be in and get out of them. Sometimes they're only a candle or 2. So you don't have to hang around very long time, but you can identify quite a few of them during the day that still correspond to a high probability trade setup and are really great for people who like to do type scalping stuff on the SPY or the futures. All right, and so again, this continuation, I've had really good results with this. I'm not going to spend too much on it, just to let you know that it's been profitable every month. This was October last year. The SPY Super System produced 48.31, 89% win rate. Here's the room. This was my results because I can't post these. You might have had even better results, or you could have had worse, who knows. But if you were in the room and you took the trades, this is what you would have done because these are all posted. And we talked about all of these. This is 17 and 3, 74, 48. Those are room and alert type trades. All right. This is ones that I can mention, but you're going to identify these yourself. All right. There's November. Again, nice. There's December. Nice. And here's October through December. Again, the SPY Super System trades produced 87% win rate, 24,000. And October, December in the room, 44 and 7. See how many more trades there were here than here? 44.7 produced 17.7, 74. Now, remember, these are completely separate. These totals don't include each other. This was separate for the SPY Super System methodology for 5-minute trades, and these were the swing type trades, right, in the room. All right. All right, so we'll just look at a couple of charts. I think I've shown you quite a few. I'm going to show you a few more just so you can see. This is a SPY Super System trade from last year. Again, here's the current time frame momentum. This is the only one you need. Notice that it went from red to blue right there. We took the trade right there. As it broke above the VWAP, it rode it right up and get out here. That was $220 profit per contract, which is a lot. Most of the SPY Super System trades don't produce that much because you usually get pullback before that much of a long run. But that was a pretty nice one right there. All right, here's another one right here. SPY Super System trade in here, out here. See how quick it was? It went compressed, broke below the VWAP with a pop out of the box symbol. You take it there, and we get out right here before it starts to reverse back again. Right? Because this is that same trade using the new template with just the current time frame momentum. See, we've got blue, bullish, went to yellow, bearish, and we get a breakdown right there below the 15 EMA and take it right there, and then you're out. Again, here's a new template for us by super system trade here. Blue, right? We're watching the price action. It breaks above the 15 right there with a pop out of the box symbol, but it's yellow. I can't take it. I take it right there when it goes green. I grab it here and I write it right up like that, right, for 4 or 5 candles. Okay, there's another one here. So I'm not going to go over every single one of these because there's a lot of them, but you can see what they look like. When the current time frame momentum is red or yellow, we can take a short if the stock is breaking below the VWAP or breaking below the 15, just like right there. Okay, and now we get these. Those were SPY super system trades. These are the trades that we took in the room. These are the what would be considered longer term trades. So a line was one of them. Now this was a 5-minute chart. We only took this for a day trade, but we had a bearish daily chart to go off of. And see how it broke right here? This is moving sideways. You break down below the VWAP. You see that goes from buying to selling, green to yellow. You buy it here, and you just ride it straight down. And we took this thing. We were in 51% profit in an hour in a line. This is a 5-minute chart. And institutions are selling the heck out of this thing. See, they went back to buying right here, telling you they need to get out. This was URGN. This is a day. This is a J trade, a swing trade up in the daily chart. It is. We took it right here. It compressed. It was buying right here, and we had buying already in the multi-time frame momentum. So this is what we were looking for. We were looking for a compression break. We took it here, and we get in on 710. We get out at 717. Didn't make much money here for a few days, and then we get a nice pop. But the momentum was there, and the institutions were still buying this thing. So we stayed in the trade. NVIDIA, another nice one here. I think I showed you this one. PBO, pull back to here, pick it up right there. And again, get in at 8.4, out at 8.7, 32%. Notice the institutions. It's so easy to see that the institutions were all over this thing, buying the heck out of it. All right. This is SMR. I showed you this one already. Here's Nike. This is the one that we took right here on the 28th. Bearish. Notice how bearish it was. This is why did we get short? Well, look, we get compression, and we didn't know the tariffs were coming, but we took it short right here. We actually were up money on it this day. We stayed in the trade. And here's where we got the big flush when the tariff news came out. Look at that drop, and that was the one we made 216% on. And the institutions that we get out of it right there, we took this out on the morning. One of the things I teach in the room is gaps of gifts. If you're in a trade long and you get a gap up, take the money. If you get you've got a short and it gaps down, take the money. Gaps are gifts because gaps don't generally continue. Two times out of 3, they'll either chop or move against you. So take the money when the gap occurs. The implied volatility and the premiums will be been increased, so you're going to get more money for it if you do it right on the open. Right. So that was Nike. This was Sarepta. We took this one as well. As you can see, is it easy to see? The institutions are selling this thing. There isn't any question about it. HIMS, this is the institutions were buying the heck out of this. I kind of missed my entry on this one. I could have got it back here, but anyway, I get it here for a nice 25% profit. HIMS. Okay, so that covers the charts. That pretty much covers the presentation. I wanted you to understand the SPY Super System software, how potent this thing is, and how effective this is for making 5-minute trades, for intraday trades, or swing trades. Works for both of those. And you're going to be able to identify when the institutions are in the trade and when they're not. And this is going to give you a huge edge over other retail traders. Remember, it's the tools that you've got that put you ahead of other retail traders. I'm not consistently profitable because I'm so great. I'm consistently profitable because I got the best tools, and I consider myself a very good technical analyst. But I've got the tools that makes this stuff work, right? That's the important thing. Okay, so again, here's the type of strategies we use. We covered these: straight calls and puts, straddles and strangles, some directional, some non-directional trades, some directional trades. It's important to have strategies that you can use in any kind of market: bullish market, bearish market, trending market, choppy market. You've got to have strategies that you can apply to whatever the market conditions are giving you. Okay, that's really important. All right, so these are the specials that they're offering. We've got 3 of them here. One really good one. And this is the 2-week free trial. You get my room for 2 weeks, and you get the alert service, and you get the videos. You can see all videos I've done, training videos, about 30 of them on the different strategies, the different indicators, all of those. Again, after 2 weeks, it rolls over to $396 a quarter. After the free 2-week trial, you couldn't cancel any time, of course. This one-time payment here, this is a lifetime. This is for the text alert service. If you want to have the text alerts and have it just this for forever, it's $24.96. You get the text for the rest of the time. You get the text alerts for $24.96, and which also includes a Discord room and the training videos, right? Now we also have a one-time payment here, and this is really, to me, this is like the no-brainer of them all. This is a one-time payment. This is my trading room access forever. The SPY Super System software, you actually get the software that we just talked about. You get this software forever. You get this, you buy it one time, you get my room, and you get the software and all updates to the software. Any changes to it, any new scanners that come along, any indicators that are changed, you get that forever. Plus you get all of the training videos, and you get the Discord chat room. We have 2 other professional traders where you can trade in there. That's $24.96 as well. This is to me, this is like a no-brainer. Now, if you're interested and maybe want to do something a little bit different than those exact time frames, you can call Rory at 786-732-4656. I think in the chat he's put a link. Yeah, he's put a link to the specials where you can just click right on there and get them. And one thing I want to point out here, we did this analysis on your annual subscription. $1,600 is the maximum per year. This would be if you just took the quarterly every quarter per year. So that's the maximum you could pay for a year for the service. The average trade size, $2,000 per trade. If you're assuming we're assuming you take all the trades taken, the historical results, and this is over the whole 3.5 years, it's the ROI per year is 40 times your subscription rate, right? So every time the subscriptions, the annual profits have exceeded 40 times the subscription cost, right? So 40 times your $1,600. This is what we're averaging for the last 3.5 years. So the subscription has consistently paid for itself many times over. Again, it's higher return on investment, simple math, and proven results. And again, here's your disclaimer. But this is what it's produced from the time I started it, which was January 2022, right at the beginning of the bear market, up through this was up through I think through August of this year. So it's not going to change much, I don't think. I mean, it's obviously there's a lot of trades in here. So I think that's a pretty important piece of information to know. This is what you can expect. And listen, again, past performance is not indicative of future results, but this is what it's produced. Okay, taking all the trades at $2,000 per trade. Okay, so there's your specials. You can click on them in there, down here in the chat room. You can call Rory. Rory will be happy to talk to you about any questions you've got about this, perhaps any questions about installations. If you buy the SPY Super System, you can download Thinkorswim if you don't have it. It doesn't cost anything. And then Right Line folks will take over your machine. They'll put the SPY Super System on it. It's going to look exactly like mine. All right, so it'll look like just like my SPY Super System that I showed you live. Okay, so that's what we've got for today. This is an excellent deal. If you're serious about being consistently profitable, take advantage of it. I hope to see some folks in the room. We've got a lot of people in there, hundreds of people in there right now. And we've had really, really great success. And a lot of people have got killed this year in the market. There has been such a bearish bias mentality that a lot of people have been trading with. They missed all of these big runs up in the market. And I don't predict what the market's going to do. I trade what the market is doing. It's as simple as that. All right, so listen, thank you everybody for being here today. I appreciate it very much. And look forward to seeing you in the room or in the alert service. Have any questions, call Rory. And look forward to talking to you in the room.